Hey there, this is Bill with smarttrades.com, and it's Labor Day Monday, September 2nd. It's about 12:25 p.m. Pacific time. And as always, please visit me at smarttrades.com if you'd like more frequent updates. Additionally, if you like us on Facebook, like Smart Trades at Facebook, I'll send you out a free copy of our recent newsletter. At any rate, let's start off with a review of the S&P. This chart originally posted in May called for a decline into that 1538, 1576 area, and then a rally to a new high, perhaps to test this upper trend channel. Well, here's the way it's worked out so far. We did indeed drop down to about 1560, and from there we rallied to about 1710. We have a long-term target up around 1770 to 1790. It's still possible we're going to hit that target, and here's how that might play out. We might be seeing the rally to the 17 area could just be one of five, and that the current decline is part of a corrective decline. Now, in order for that to be the case, we've got to hold above that low around 1560. basis the S&P cash. Right now we're testing a trend line, and so far we're holding that. This pattern down certainly looks like a five-wave structure. Here it is on the hourly chart. We've got one down, a possible running flat 2, expanded flat wave 4, and that gives us our nice resistance target around the 1670 area basis the S&P cash. Now that 1670 area is it's also the closing high back in May, and also about 50% of this entire decline. So we'll take this, as always, one step at a time. A corrective decline into that area that terminates, say, around 1670 is certainly something that I would consider selling. But again, we'll see how it plays out. Now, again, this can be counted as having peaked, and if that's the case, this decline could just be one to the downside with much more to come. But it's also possible this decline is just a of our fifth wave up. So in that case, you might see a drop down to about 1617, possibly as low as, say, the 1590 area. Here's our count on the euro from May. Is incorrect in terms of counting B as complete. It looks like it's still obviously it slid over a bit, but we still have the basic count intact. A down, B up, and A equals C is up around the 124.80, 125 area now, and a 1.272 times A comes in around the 122 level. Like the euro, we're looking at a big contracting triangle in crude. We counted the low in May as a possible B wave. Here is that pattern expanded and updated. A up, B down, and a possible 5 up complete. However, it's also possible to count this structure as still ongoing with one more pulse, perhaps up to the 114.50, 115 area. If you count this as a 1-2-1-2 rather than a possible running correction for wave 2. We'll see how it plays out. A corrective rally that fails below the recent highs, I think, would be a sell. But if we hold this previous fourth wave support short term around 105 or so, new highs are certainly possible. So we'll monitor that in real time at smarttrades.com. Here's the chart from May for the natural gas. Natural gas we had labeled as an ABC up, and we have our A, B, C, and then possibly 5 down to a low. It's also possible to count this as ongoing. Charts like markets like natural gas, you're going to see imperfect patterns in respect to Elliott wave because they're just not traded by the masses like the stock indices are. So don't expect perfection. That said, the rally up to the 450 area or so was a classic ABC. It sure looks like a fourth wave type of pattern, so I would be alert for a bottom here. We're looking for perhaps a corrective decline that holds above recent lows if the bottom's already in, or perhaps a fifth wave down to 3 or so. Gold. We're counting this as an ABC decline back in May. I still believe that's the case. However, obviously it dropped lower than we had originally expected. That said, as we updated this in real time, it was clear that we had corrective rallies here, particularly as you got into this test of a 1423 area. And we are again testing that 1423, which, as you can see here, is labeled as a previous fourth wave. Kind of a critical area here and up to perhaps 1500. If this is a corrective rally, it shouldn't go much above 1500 and perhaps has already peaked. That said, you could also count this as a 1, 2, 1, in which case it shouldn't take out the lows that are noted here at B. Here is that count showing this as an impulse already finished. A, B, 5 waves down of C already complete. But again, we have to certainly hold that previous low at B, and certainly hold this low down here. Obviously, if the bottom is in. Bonds. I was looking for a new high in the bonds. Obviously, that did not occur. That said, I think the basic pattern of an ABC decline is correct, at least to the extent that this pattern from the peak best counts as an ABC decline. Another way to look at this is that ABC decline did in fact bottom there, and we had a fifth wave failure below the previous highs. If you look at the 10-year notes, and also the 5-year notes, they all made new highs. From there, however, we have a possible impulse down. And the question becomes, is that impulse a change in trend, or is that impulse actually a C wave? When you look at the longer-term perspective on the bonds, we still are in a long-term uptrend. We've got a possible fifth wave to come longer term. We have no overlap with wave 1 yet. So we shall see. The main thing to watch for here is the nature of this next rally. If we have a corrective rally that fails, say around that 139 area, that would be a red flag. Also, there's a shorter term resistance for the bonds around 133 or so. Also to note here, one of my favorite indicators is the ADX. You'll notice at most of the major turns you have the ADX is well overextended. Here it is at the wave 1 peak, the wave 2 bottom, the wave 3 peak, and we have that kind of overextension in the ADX right now on the recent lows. Additionally, you have a volume non-confirmation on the last low. So some kind of a bounce is probable here. Certainly possible. We could still go down and test that long-term trend line. Like the natural gas chart, I don't think bonds are as well suited to perfect Elliott wave type patterns. Nonetheless, certainly the basic patterns are very readable, and we do have both previous swing support, whether you want to call it a fourth wave or not, as well as the trend line support on the continuation chart coming in perhaps around the 126 level. So whether it's bottomed or not, I'm not sure. I think perhaps it has, but we shall see. As always, please visit me at smarttrades.com if you'd like more frequent updates. Like us on Facebook if you want a free copy of our recent newsletter. And I really appreciate you watching. Hope you're having a good 3-day weekend. Thank you very much.